Good day, ladies and gentlemen. So today I want to teach you a powerful strategy which you can use to make money in the forex market. Okay, so for this strategy there are three things that you need. Three things for this strategy. Quickly, let's get right into it. The very first thing you need is the 200 period moving average. Okay, 200 EMA. Why do you need the 200 EMA? We need the 200 EMA so that you always trade in the direction of the trend. Okay, as they say, the trend is your friend. So you need the 200 EMA. The next thing you are going to need in order to make this strategy work, which is the second thing. Okay, the second thing you need for this strategy is what we call BOS. Okay, BOS, which stands for break of structure. You need to see a clear break of structure. Good. Now the last thing you need in order to make this strategy work, okay, the last thing you need, which is the third thing, is simply FVG. Okay, you need an FVG, which is a fair value gap. Being able to combine these three things will make the strategy work for you. Okay, so what are the steps you need to take? For those that don't know where to get the 200 EMA, just come to the top of your MT5 right here. Okay, you go to the top, you click on that indicator sign, then from there you click on F plus. Look at this, you click on this F plus. So when you click on that, you scroll and then you select moving average. Look at the moving average right here, you select it. Sorry, I selected something else, so let me go back and click on it. Moving average, you can see this. You can do a screenshot of this so that you'll be able to have my exact settings. Okay, so when you're done, you click on save at the top. You can see save at the top right there. You click on save, okay, and you're good to go. So let's get back to the charts. All right, so how will you apply this strategy? Once the the price is above the 200 EMA, we are only looking to buy. Okay, we're only looking for buy opportunities once the price action is above the 200 EMA. Whereas if it is below the 200 EMA, we are looking out to sell. Okay, we are looking for sell opportunities. All right, so how are you going to start this strategy? The very first thing you want to see is you want to see an impulsive vertical move in the upward direction. An impulsive vertical move in the upwards direction. Anytime you see that, it doesn't have to be perfectly vertical like this. It could be a little bit slanty, okay, but you need to see that, impulsive move, that clear sign that yes, price is trying to move in the upward direction. Now once you've seen that, the next thing you need to look out for is that impulsive move must leave an FVG. It must leave a fair value gap and it must break structure. So once these three things are in place, you are good to go. And as you can see, I've already marked this out. This is an impulsive move in the upwards direction, okay, that broke this structure right here. Okay, so let's check and see if we have an FVG. Is it above the 200 EMA? Yes, this black line you see here is a 200 EMA. So I'm only looking for buy opportunities. Okay, so let me get my horizontal lines. I think there's an FVG right here. Yes, let me quickly explain something else. The FVG you are to use should be such that the third candle body does not close above the wick of the second candle. An FVG is formed by three candles. Okay, so this is one candle right here, this is another candle right here, and this is the third candle right here. Okay, so you have an FVG there, but that particular FVG is not to be used. Why is it not to be used? You would notice that the body of the third candle, which is this candle right here, the body of the third candle closed above the wick of the second candle. So that's not the type of FVG we are going to use. Okay, so we need an FVG whereby the body of the third candle does not close above the wick of the second candle. Okay, so that's the best FVG to use for this strategy. Okay, I'll quickly explain, I'll elaborate more on what I'm saying. Look at this, there's an FVG here, this is an FVG. Okay, but as you can see, it was not tapped into. It's not a valid FVG for this strategy because the body of the third candle is above the wick of the second candle. But if you look well, you also see that there's another FVG forming at the top here. there's a fair value gap at the top right here. Good. So there's another FVG there, and you would notice that the third candle of that FVG, its body did not close above the wick of the second candle. So that's the FVG to use. You wait for markets to pull back into the FVG, you take your buy trade to move to the upside. As simple as that. That's how simple this strategy is. Okay, so let's see if we have another opportunity. I've marked some examples out. We have another vertical move right here in the upwards direction. Okay, so let's see the FVG it formed. Did it break structure? Yes, it broke structure. This is structure, it broke right there. Okay, so break of structure is checked. FVG checked. Is it above 200 EMA? Also checked. So we are good to go. So let's place our horizontal line to form the boundary of the FVG. Now, is this a valid FVG? Yes, because the third candle, the body of the third candle did not close above the what? Did not close above the wick of the second candle. So it's a valid FVG for this particular strategy. Okay, so you can see an instant tapping. There's an instant tapping of the level. Okay, that particular blue candle tapped into the level immediately and gave us a nice buy trade. By the way, I'm on the 1 hour time frame, so these buy trades you are seeing are going to give you a lot of money, so don't think it's 5 minutes. These are 1 hour candles that are moving in the upward direction. I think there's a double tap because it still came in to tap into the region and it gave us an upwards trade. Okay, a nice buy trade. All right, so do I have one more example? Yes, there's one more example right here. Let's get right into it. What do I see? I saw a vertical push, okay, in the upward direction. Does it break structure? Yes, it broke structure. Is it above the 200 EMA? Yes, it is above the 200 EMA. Okay, as you can see, the 200 EMA is still here, so we are looking for buy opportunities. So let's search to see if we have a valid FVG. There's an FVG right here. Okay, is it valid? Yes, because the body of that FVG of the third candle did not close above the wick of the second candle. Okay, and we had an instant tapping. There's an instant tapping which took us in the upward direction. If you look well, you would see that. Let me zoom it a bit. This candle right here tapped on the top of the FVG, then pushed in the upward direction. But if you missed that, you would notice that another FVG also formed here. Oh, we won't be able to use that because the body closed above the candle. Okay, the body of the third candle closed above the wick of the second candle, so we won't be able to use that one. But assuming you used it, you can see that it still pulled back into it and gave us another buy opportunity. Okay, so basically that's just how it goes. This is Friday. I think this is Friday. Okay, and there is no good opportunity on Friday. You can see market is just manipulating throughout Friday. Though if we look well, I think there's a vertical push right here early on Friday, and let's see, it also formed an FVG. Okay, formed an FVG, but if you want to follow the rules strictly, you might not have taken this particular trade because the body of the third candle of the FVG is above the wick. Okay, though sometimes it's going to play out for you. All right, so even on Friday, with the manipulation going on Friday, market still tapped into the FVG and still gave us a little bit of buy opportunity. Okay, this thing happening here is the reason why some traders, experienced traders, don't trade on Fridays and on Mondays, because a lot of manipulations happen, okay, on Fridays and Mondays, because Friday is like the end of the trading week and Monday is the start of the trading week, so a lot of manipulations tend to happen on these days. Better trades are taken between Tuesday and Thursday. This is Sunday. Okay, so let me see if I can give you one more example before I go. But if you're getting any value, please subscribe to the channel. That's the way you encourage me to keep doing this. Okay, so on Monday I can see an aggressive push in the vertical direction, so this is a perfectly vertical push. So I just need to start looking for, did it break structure? Yes, it broke that structure, so that is checked. I need to start looking for FVG, okay, which I'm going to enter on. I can't find any FVG. It left instead a demand zone right here. Though I won't say much about the demand zone, so I don't get to confuse you. Let's stick to the rules. Tapped into the zone and pushed, but let's stick to the rules. We are looking for FVG. Okay, so I can see an FVG up here. You can see this big bullish candle. It left a fair value gap behind because the wick of the first candle right here, the wick of this red candle did not intersect with the wick of this third candle, okay? And if you look at the third candle, you would notice that its body closed below the wick of the second candle, so it's valid. I just need price to pull back into it and give me a buy opportunity, which I would have taken right here. And you can see the way price moved in the upwards direction. Price tapped into the zone multiple times, still giving us upwards movements. Okay, so if you're a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.